we're not going to have the most beautiful bank numbers, but people are expecting awful things from the banks. And when you get awful coming in, if you remember last quarter, JP Morgan, the stock came in hot, and it didn't do anything. Citi came in hot, and it's been a disaster. Bank of America was looking good, now it's looking terrible. That's exactly what you need going into earnings week. You need lots of people having given up on a group that I think is going to report not that bad numbers.
JP Morgan was my all-weather stock yesterday, and that was kind of a crazy thing to do, but I believe that, yes, because it outperforms its peer group. I say this about financials. Easy to attack them. They've underperformed the S&P from last February to the lows by about 11.5%. During this period where yields have been plummeting, and they've obviously rallied back over the last couple of days, but the banks outperformed the S&P from mid-December to this point. And that tells you something about where they could outperform now.
Banks have underperformed, and they had a really rough 2018. It makes a little bit of sense now that we're seeing more and more of this in the financial world in terms of a lot of analysts are now starting to take a look. I know we had a downgrade just the other day of, I believe, JP Morgan, but we're seeing some upgrades across the... I think they've gotten so cheap, Scott, that people are just saying, you know what, these analysts are looking at it. The story hasn't changed dramatically, but I think the only part of the story that's changed is where are they trading right now versus the book value? And because of that, I think it is attractive valuation.
We're looking for institutions that we think can deliver positive operating leverage. Bank of America has been showing that in spades, in particular in their consumer business. We think there's more they can do there. And JPM is on a roll for market share gain in a variety of different businesses in a very positive operating leverage way. The bull case for Goldman is if we get through the 1MDB, as you indicate, with very little reserving over and above what we've got in our model, that yes, it's very reasonable.
Is Citi an indicator, though, of what we're going to be hearing over the next 2 weeks, effectively, from everybody else, or do you think they're an outlier?
I think in the capital markets, it's going to be very similar for the other large banks. I think to Joe's point, just on why can't you make more money as it relates to yields, it's going to be really tough. Surprises that you can get anywhere here that's different would be just some slight gains or losses in market share in the league tables. When you look at Goldman or Morgan Stanley, it's more what's coming from prime brokerage and from the hedge funds. Right. And was it automated trading in December, or was it lots of participation? That's just the trading call. Then you got to look at these stocks. They're down a lot. Goldman, which we have a buy on, is sold off the most. I think they have more of the delta on the upside. We have buys on Goldman Sachs and also JP Morgan. Goldman, because it got really beat up last year, and I see upside. JP Morgan just executes beautifully. You know, it's a continuous story for us. We have a sell in Wells Fargo, mostly because brand damage, the Fed asset freeze. At the end of the day, it's hard to run a business and have all that attention to run the business and be compliant. Citi's fine, but you got that emerging market risk. Bank of America, good block and tackle. They missed an investment banking last quarter, so we essentially have a whole recommendation on that.